Hi boys, and welcome back to day 21. Now today we're going to talk about two topics that are very important, but they don't really fit in anywhere else, so we're going to talk about them today. These two topics are uncertainty and speculation. First, uncertainty.
Dad, I'm pretty sure I know what uncertainty means. I think I do, I'm pretty sure.
Exactly. Uncertainty, being uncertain, not knowing what the future holds, can be downright off-putting to some people. People don't like it, and sometimes for good reason. Here's an example. Suppose I told you that tonight you're either going to be going for a long bike ride, a strenuous bike ride with Grandpa, or you're going to be coming to a nice fine dinner with your mom and I. And you don't know which one. It really depends on if Grandpa gets his new bike in time. Now, you may be fine either way, but which one do you prepare for? Do you not exercise knowing you're going to exercise a lot later? And do you not have to worry about showering and looking good because you're just going to be on a bike? Or do you need to actually exercise to work off some calories so you can have a nice meal, and you need to take a nice shower, put some pomade in your hair, make yourself look all nice so you can go out to a fine restaurant? Well, which is it? This kind of thing happens in the investing world all the time. People look into their crystal balls and see all kinds of potential futures, each one benefiting a different set of stocks. And they don't know what to do. Not knowing what the future holds means that they don't know where to invest. Here's a real-world example. Right now, as I'm recording this, on May 5th, Cinco de Mayo. We don't know if COVID's going to die out, or if it's going to keep going, or if it's going to peter out, if we're in an endemic stage or not. Are we still in a pandemic? Are we in an endemic stage or not? Is it coming back? We don't know. Well, if it's coming back, you want to invest in Pfizer and Moderna and the work-from-home stocks and things like that. If it's dying out, you want to invest in the cruise lines, the airlines, the hotel stocks, the big reopening stocks, right? Well, which is it? A lot of people see this in their crystal ball. They don't know where to put their money, and so they just sell out of their stocks, hold a bunch of cash, and wait until things become more clear. Here's the thing, though. The future is always uncertain, and trying to predict the future is a fool's errand. In fact, to try to make that binary decision that either it's going to die out or it's not, it's kind of a false dilemma, isn't it? There are a lot of other scenarios that can happen here. Maybe COVID kind of peters out. Maybe there are kind of waves as it goes out. Maybe it comes back for a little bit, then goes. Maybe it comes back stronger and kills us all. Or maybe like most other pandemics, it just goes away. We honestly don't know. So when people try to predict the future, a lot of times they're wrong. They're looking and saying, oh, it's going to be either this option or that option. And really there's 20 options that could happen. So don't do that. It's more of a trading mentality than an investing mentality anyway. Let's try not to predict the future like that. But the main thing to know here is that uncertainty makes Mr. Market uneasy. It gets him depressed, and it tends to throw stocks on sale. And we like to buy stocks when they're on sale. So when people sell off their stocks, there's really two types of stocks that you should be looking at to take advantage of when the prices go down because people are selling off stocks. The first type are stocks that have nothing to do with the issue. No matter what happens with COVID, does that really affect Procter & Gamble? Are you going to buy less detergent or deodorant? No. If COVID goes away, people may move back to the cities. That means they're going to be selling their houses and buying houses, right? Well, that's good for Home Depot. If they stay put, on the other hand, they still got to maintain their house. They probably want their house to be nice because they're around their house more often. That's good for Home Depot. Plus, we have a housing shortage still. It's good for Home Depot. No matter what the future holds, it's good for Home Depot. I think people are going to shop at Costco no matter what. I'm pretty sure things are still going to break down and need repairing, and mechanics and electricians and others are still going to need tools from companies like Snap-on. You get it? They're companies that have nothing to do with the issue. Look into those. When companies that have nothing to do with the issue get sold off because of some issue that they have nothing to do with, buy some shares. The other type of stock to look into are ones that are misunderstood by the market. Now, they may have a lot to do with the current issue, but they still benefit either way. Let's take Moderna, for example. A lot of people think Moderna will suffer greatly if COVID dies out because they won't be able to sell their COVID vaccine anymore. And there's some merit to that argument. However, Moderna's ticker symbol is actually mRNA because they are specialists at making vaccines with mRNA technology. Now, this is a technology that you may learn about later in biology, but in short, they're able to make a vaccine for something very quickly after sequencing it. Okay, they can get a disease or in the lab, a virus in the lab. They can sequence it within hours, days at most, and have a vaccine for it very quickly after that. Secondly, their windfall with COVID, basically them hitting out of the park with that, helped them get a whole lot of cash, right? Which helped them build up their manufacturing capabilities, helped them get their experience in order. They know how to navigate the red tape involved in agencies like the FDA and others around the world. They have a lot more experience. not just on their scientific side, but also on their legal side, their marketing side, and all kinds of other things, right? That's something that doesn't go away with COVID. Another benefit of that windfall is they have a ton of cash. They have over $10 billion in cash and less than $1 billion in debt as of the time I'm recording this. That's a lot of money to play with. They can do all kinds of things like, research other vaccines. We're always going to need vaccines. There are always new viruses that come up. There are even a lot of old viruses that we have no vaccines for right now, like, HIV. They're working on an HIV vaccine right now. Now, that may take a while, but they'll still be able to make a vaccine for it, and that'll be huge. And I'm sure that's not the only virus that they'll be able to attack. And lastly, COVID's still a thing. It's not going anywhere for a while. Most likely, at least not all over the world. Maybe in the United States it may be petering out, but we only make 5% of the world's population. The other 95%, for the most part, it's still going to be there for a while. China's having a really hard time with it, and their vaccines don't really work very well. Maybe they want to get some of Moderna's vaccine for their 1 billion plus people. Who knows? In other words, just because COVID's petering out, if you assume it is, and we're entering an endemic phase of this virus, great. But that still doesn't mean Moderna's going anywhere. In fact, they're now stronger than they've ever been and can attack all kinds of things. They have a huge launching pad to attack all kinds of other viruses, and they're ready for the next time there's a new virus that comes out. So if Moderna goes on sale, buy. Moderna is just an example this time around where people think their fortunes are tied to COVID, and that's not really the case. Kind of. I mean, it helps the company. I hope COVID goes away, but it does help the company if it sticks around. But on the other hand, they're going to be just fine regardless. That happens all the time with uncertainty, where people tend to think in a black and white scenario type of thing, and either in one way is going to really hurt a company. And that's the problem with black or white thinking. A lot of people think, this will either kill the company or benefit it. And a lot of times that thing that kills the company doesn't kill the company. The company will be just fine regardless. So when those people sell off that company, you can buy that company. So in summary, uncertainty can make Mr. Market really fearful, and he can put stocks on sale for you to buy at cheaper prices. Take advantage. Now let's move on to speculation. Now we've briefly mentioned speculation a few times before, but let's cover it a little more in depth now. Now, I like my best of breed companies, right? I like my Costco, I like my Home Depot, I like my JP Morgans, my Waste Management, Snap-on, Alphabet. But here's the thing. A company like Costco, they're a fine company. I love my Costco. And they may go up, say, 30% one year, maybe 40%, even 50% one year. But you're never going to see them grow up 100, 200, 300% in a single year. They're just too stable a company with too stable a shareholder base. That's not going to ever happen with them. To get those kind of returns, you have to look to the land of speculation. Now, what do I mean by that? I'm talking about companies like this. Companies that are small. They're almost always under $10 billion in market cap, usually under $1 billion in market cap. In other words, they have plenty of room to grow. Secondly, hyper growth. These are companies that are growing very, very quickly. Their revenues are growing at least 100% a year or better, maybe 1,000% a year. These are companies that are just growing like rockets. Gangbusters. Cinco de Mayo. Anyway, they're growing like crazy. Third, they have a huge market opportunity, meaning their addressable market, the amount of money they could be making if they run that market, is hundreds or thousands of times what they're currently doing. Let's say they're selling $1 million a year right now, but the total addressable market is $10 billion a year. They can grow 10,000-fold. I'm talking companies like that. Fourth, they're a disruptor. That means they do things a different way from everyone else, a better way, that is, or they're solving a problem that no one else is solving. They're disrupting the market. Think about Netflix in the Blockbuster days, or when the iPhone first came out to BlackBerry. These are companies that shake things up. And lastly, they're usually unprofitable. And this is the thing that scares most investors away. As it should. These are companies that are in hyper-growth mode, remember? They're worried about growing their revenues. They're growing their top line. They're attacking that huge addressable market opportunity. They're growing like gangbusters. They don't care about profitability yet. They care about getting as many customers as they can, and then profits will come later. But that freaks out a lot of investors. Here's the thing. A lot of these companies will go out of business. So investing in speculative companies like this is risky. And there's a lot of these kind of companies. There are hundreds, if not thousands of them. How do you pick which ones you should invest in? Here's the thing. Speculative stocks, this is the land of the 10 and 100-fold gains, right? If you invest in a stock, it can only go down 100% of what you put into it, right? But it can go up a lot more than that. In theory, it can go up 1,000-fold, 10,000-fold. Who knows? So how do you find these wonderful companies? Well, remember day 10? Use your edge. How to find stocks? The first thing is to use your edge. Look at what you know. What do you understand? Look at the world around you and find those stocks. What do you see? Look at the world around you for stocks that are doing things. I'm using the term stock when I meant company. Sometimes I use those terms interchangeably. The company does things. The stock just is a part ownership in the company. You know what I'm talking about. That are solving problems that no one else is solving, that are doing things better than everyone else. Look into those companies, especially the ones that are small, unprofitable, yet have a huge market opportunity ahead of them. Otherwise, look into companies that you know make sense, you understand, and you know they fill a huge need. And they're growing like gangbusters. Owning these kind of stocks can be fun too. You'll fluctuate like crazy usually, but when they start going up like a rocket, they make you feel really good. It can keep you interested in your portfolio, make you interested in investing, and make you want to find the next one too. They help keep you in the game. They help keep you investing. So assuming you're okay with investing in speculative stocks, how many should you own? You probably want to diversify, right? Yeah. Well, could you have all speculative stocks? Well, for you guys, ages 11 and 13, yeah, you definitely could. You have a whole lifetime ahead of you to invest. You're going to be making your more serious money after college, right? So right now, the little allowance money that you're investing, the nickel and dimes you're investing right now, if you lose the nickel and dimes you're investing right now, it's not a big deal, longer term. But on the other hand, if you discover the next Microsoft or Amazon early on, that $10 you invest could turn into $100, $500, $1,000. And yes, you will be wishing you invested more money. That's a good problem to have. But later on in life, when you're like my age, you want to limit how much money you put into speculative stocks. A good rule of thumb for that is 20%. No more than 20% of the money that we invest goes into speculative stocks. The rest of it, the other 80%, goes into best of breed. That's my rule. You may have a different rule. It's all about your risk tolerance. You know I love my best of breed stocks, but our biggest winners have actually come from the world of speculation. But then again, so have our biggest losers. So here's my advice that I've had to earn over years of getting slapped around for how to actually invest in speculative stocks. First things first, you have to understand the company and you need to know why they are a disruptor. Why can't the competition come in and just do what they do? Why are they doing it better than everyone else? Why are they fitting a need that no one else has fit? Why is it difficult to do that? What's their moat? What's keeping the best of breed companies from going in and squashing them like the bugs they are? Secondly, ensure their revenues are growing by at least 100% a year. Third thing, cash. Make sure they have enough of it to get them through the unprofitable years. So assume they're losing $100 million a year, yet they have only $500 million in cash. Well, then they can only do this for 5 years, right? Is that enough time? Will they be profitable by then? This requires a little bit of finagling. What I like to do is say, I'll come up with a chart that says, okay, well, here's how much money they're losing right now. Time, money. And you want to see something like this. They're losing money right now, but you see they're going to be making, and eventually they'll break even, and then they're going to be making money after that. You'll see they've lost this much money in one quarter, then this much money, then this much money. You want to see these numbers rising, and then you can kind of predict at some point they're going to break even. Do they have enough cash on hand to get them to that point? That requires some math. If they don't have the cash, and they're going to be relying on the markets to provide them with more money, either through issuing more stock, which will dilute your shares, or through a bond issuance or something else. You don't want to have to depend on that. You want to see their earnings rising from negative to where you see a point where they're going to be breaking even and eventually into the promised land. So make sure they got enough cash for that. That's it for this time. See you next time.